Welcome to another week of our Forex Trading School. This week, we're going to be looking at understanding order block. What is an order block? Before we can properly understand the concept of order block, we need to understand the concept of block trade. But first and foremost, let me give us a definition of order block. Order block simply refers to specific price areas where the big institutions have previously placed their significant orders. Big institutions. This is the key word here. Before we go further to look at charts, to know how we can identify where the big institutions are trading, I want us to look at the concept of block trade. A block trade is a large, privately negotiated securities transaction. Remember, we said that order block has to do with what? Where big institutions has previously placed their trade. How do they place this trade? That is what brought us to look at block trade. Block trade is what? A large, privately negotiated securities transaction. You need to understand that for you to call any order a block trade, for instance, in the stock market, the New York Stock Exchange and NASDAQ, they defined a block trade as one involving at least 10,000 shares of stocks or a stock that is worth more than $200,000. And even most of the cases, we'll see that most block trades far exceed these minimums that they established. It's important to note that block trades can be made outside the open market through private purchase agreements. What do I mean? Let's say an investor wants to sell 500,000 worth of Amazon shares. If this investor sells this 500,000 Amazon shares at once, is going to have a significant effect in the market. So what happens? In order for such significant effects not to occur in the market, they will go behind outside the open market and go through what? A private purchase agreement. They will sell it, they will just find a buyer who is interested and transact outside the open market so that it will have no effect in those market of ours. Then when they look and they did not find any interested buyer outside the open market, the hedge fund that manages this stock for this investor will now find a broker, and in the brokerage department, that's what we call block house. Block houses are specialized intermediaries that can facilitate block trades. They are licensed to do that. They are trained to do that. The hedge fund now locates a block house. So this block house will now split these orders into chunks, very small chunks that when it is being sold, the price of that stock will not be affected drastically, right? So that is what block house does. Block houses place block trade, and block trade are large securities, big amount of money, big institutions, they handle these trades. So these brokers that the block houses allocated these stocks to, they now execute these trades at different times and at different prices. Now that is where the concept of order block came from. Order block is simply a word that came from orders of the block house. That is the big orders. So when we are looking at the financial market, when you are looking at your chart, you are looking at how do I locate where these big institutions has placed their orders. If there are 500,000 orders of gold euros to be executed from this point, Okay, and I know that these orders cannot be executed once. I know that if one broker that the block house had given the chunk of the security, if they place the order at this time, let's say in the morning, or they place it today, the next broker will not place at the same time. They will need to wait for that order to move and then come back and refill the orders. So if I know and understand this, what will happen is that each time that an order has been filled, knowing that these orders are still incomplete, I will go back to where the previous order was filled and wait for price to return there so that I can follow the big institutions and move. That is where people get the idea of trading like the big institution. Trading like the big institution is simply monitoring or observing the handwriting of the big institutions on your charts, in the sense that you know that as a retail trader, you have little or no impact in the market. So like here, we have retail traders functioning here. But when you have large expansions like this one, we know that what retailers cannot make this move. Let me go to a higher time frame. Let's say daily. If we notice what happened here, this is the retailers participating here. What this chart? So this is the retailers participating here. But when you now see expansion, you know that what big institutions that they acted or that they placed order around this zone. So you can mark out this zone as a zone that what that you know that someday, sometime, that these big institutions, they are going to come back here and fill their orders. And one thing you will know is that once big institutions, they push in order in the financial market, we are going to experience imbalance between buyers and sellers. This means that what we are going to, if you look at here, you notice that what there is an imbalance between buyers and sellers from here to here, in the sense that only buyers participated significantly here. That is the orders of the big institutions. But then we need to have a balance whereby sellers also come back here so that we can have a balance in the market. So you know where big institutions or block houses have placed trade by what? Big volumes of candle and imbalances in the markets. Haven't understood what block trade is. So now let's look at our chart practically to locate other blocks. Before we get into charts properly, we need to understand that this other block are also what we call the areas of demand and supply. So what happens is that because most retailers have now understood that the big institutions, they are the ones that move the market. So we have this sentimental influence that make us that all of us, we are now looking for where will be the next place that these big institutions are going to complete their orders. So we look for places we call demand or supply zones. Supply for selling, demand for buying. In the sense that what you are now looking for zones like this to mark. You say what? This is what? A demand zone, because you know that most traders or the big institutions, they will come here and fill their orders to buy, right? So if we look at what is happening here, we had retailers struggling here, but all of a sudden we had an expansion in this direction. So we said that here is what? A supply zone. And we can see price came into that supply zone and then started selling off, okay? Why is it that price is pushing up here? Look at this. We notice that what? There is the handwriting of what? Big institutions here, because we have big expansions, and then price returned here and started pushing up. So other blocks, if we can locate them, they are usually what? The areas of demand and supply. Now, how do other blocks affect the markets? Other blocks affect the markets in different ways, like the price movement. Due to a large size of orders from the block house, when a big block of orders is executed, it can push the price up. While when a long block of sell orders is executed, it can push the price down. Secondly is liquidity. Other blocks can change how liquid a market is because they are often big enough to absorb all available liquidities. Then thirdly is market sentiment. I've already said that what other block may signal the sentiment of large players in the market. So every retailer is somewhere waiting, and then the moment the price comes into it, we're all looking to do what? Buy or sell from the zone of other blocks, because we believe that big institutions, the block house that they have executed or they will execute another order in that zone. So overall, order block is an important concept in price action trading, and it can provide insights into the behavior of institutional traders. And it also reveals to us the key levels that are likely to impact the price of an asset in the future, right? So order block is very, very important that you understand it, because if you know that the big guys are the real players here, then you should align yourself and trade like them. How do I identify order blocks? The first thing I will tell us is look at how prices have moved in the past on the chart to see where the market has reacted strongly. Remember that money is the force that moves the market, and the bigger the volume, the more we can have a strong momentum in the market. So let me say that I'm trading 4 hours time frame, and or let me start from what, because you actually have to go to monthly higher time frames, all right? So how do I identify areas of order block or where the big institutions have played role? Now let's start from here. If you look at this place, you will see what this big candle. We had little move by retailers here. So I know that what there is another block here. Let me mention that order block is not a price, is a level. You don't say it must be here. No, it's a level. So I mark out the zone where the order started. We had a strong move from that point. And then if I look again, after we push price down into here, so I can notice that after we made a big expansion here, we created another block here. So I knew from this that price is going to come back to that zone. Remember, it's a zone. And then we moved all the way again until here. Someone can be here actually waiting because there is an order to be filled here or to be completed there, okay? So everywhere you see long candles, look at this, retailers cannot cause this move. It is what? The block house. Now, let me go down to weekly time frame. Now, if we look at weekly time frame, we will see what? Look at this move. Someone can be here waiting that there is an order to be filled here. There is an expansion here. Someone can be here waiting that there is an order to be filled here. That is how you mark out where big institutions have played. You go and sit where the order began. You go and sit at the zone where the strong move started, because you are anticipating that they will come back and finish up the order, because there is a rule that restricts them from filling their orders once, okay? So you go to daily time frame. I'm just trying to touch every time frame. Every time frame has its own order block. So I will go to daily time frame now, and I will see there is what? A large move here. I will mark out this zone as what? Demand zone. That price is going to return right inside here before making an upward move, or later in the future. You can't tell when they come back. Your own is to follow price action zone, okay? Now, we had a strong move here. So someone will be here waiting, because you know that sometime in the future that they are going to return and then complete the order that they have already filled. Okay, so let's go down to 4 hours time frame. Do we have other blocks in 4 hours time frame? Yes, there are other blocks in all time frames. So that is why you can use the same strategy as a day trader or swing trader or position trader, all you need is to align that strategy to your time frame of interest. Okay, so if we notice here, we have an expansion, so we have other block here, we have other block here because we had an expansion here. So every big move is the handwriting of the big institutions. And having understood how block trade works, they don't execute the trade once. They split it into chunks and then execute it in different times. When price comes inside that other block, you observe price behavior. What are you looking at? You are looking at your price action to know if you are going to see something like rejection or a very big volume and all of that. Whatever thing that gives you signal. When price comes inside that other block, you'll be looking for that signal, okay? And then you look for your trade entries, you enter, you look for confluence, use something else to validate what other block zone is telling you. You should have confirmation strategies, some things that other than other block, this is what I look at. For me, my top-notch signal is change of character in my time frame, okay, of entry. Once I see change of character, I wait for retest and then I strike, okay? Then make sure to set your stop loss below the other block zone and then apply proper risk management. So that is what we call other block. Other block is associated with what? Big institutions. So you need to align yourself as a retailer and keep asking yourself, where are the demand zone, where are the supply zone, where are the big institutions most likely to complete their orders, where are the block houses most likely to complete their orders. All right, that will be it for other blocks and block trade. In the next video, we're going to be looking at fundamental analysis. How do I trade news? How do I approach news? See you in the next video.